Hello, good afternoon. It's Adil Fazal here, market analyst at CFDs.com. This is a mid-afternoon update on the European indices. Okay, so be sure to visit CFDs.com for your trading needs. Certainly explore their products and services that are on offer. Alternatively, visit www.cfds.education to certainly learn more. Okay, now we seem to have a raft of economic data coming out of the US at present. Import prices minus 1.2%. Okay, minus 8.2%, so not as bad as expected. And initial jobless claims certainly came out stronger than expected, or should we say, came out weaker than expected. So certainly a mixed batch of data if you are a trader of the indices. Okay, so interesting. Okay, let's try and decipher the markets, folks. Okay, so first of all, we'll start off with Asia, as always. Mixed set of obviously results or a signal from Asia. You had the Hang Seng down, the Shanghai up 2%, and you had the Nikkei obviously down for almost 500 points. So let's just bring up the chart of the European indices, or should we say Asian indices first. The Nikkei certainly has closed the gap, so therefore gap fills support and has put in a registered a bottoming tail. And that generally means that you have a pivot low in European indices. Now, I did discuss this yesterday and the potential of that to occur, and that's exactly what has. Okay, daily chart of the Shanghai. I explained yesterday that we are into support, and that's exactly what we've done. We've certainly bounced 2%. So, from my perspective, European indices, or should we say Asian indices, certainly putting in a pivot low and certainly putting in a reversal, and therefore you are looking at higher prices in European session and US session to a large extent as well. Okay, so certainly overall, I'd say net positive or bullish. So why have European indices come under immense pressure today? Now, we'll discuss mainly due to Renault's concerns. Obviously, the ongoing concerns from US overnight, those certainly added to it as well, but certainly have bounced quite handsomely ever since. Okay, and given the fact that we've had BOE and the ECB certainly post a dovish picture, that certainly has helped the equity markets as well. Okay, FDI data, wholesale. Additionally, also we had wholesale prices out of Germany actually coming weaker than expected, which again supported the argument for more QE. Okay, and also the BOE is certainly very, very dovish, and that was expected to a large extent given the fact that obviously we have these ongoing concerns in China, etc., etc. Okay, right. Okay. Now, where do we go from here? So let's bring up the charts of European indices, and this is quite important given the fact that obviously you've got a dovish backdrop and you have Asian markets into support. Now, what I would also like to share as well, given the fact that I am discussing the global markets here, is bring up the chart of the S&P 500 too, and just give you an insight as to why that was in support, or why that is into support, and why that will obviously help the European markets as well. So let me just bring up the chart of the S&P. Okie dokie, I can't seem to find that at all, nor can I find the NASDAQ. Okay, right, let me just get them added on, bear with me. So S. Okie dokie. Go, and the NASDAQ as well. There we go. Okay, so let me just save this as well. So apologies for I always try and make these videos short and sweet so that everybody can digest and continue with their trading activity. And today, I apologize, this will not happen again. I'll get this rectified now. Okie dokie. So yesterday's sell-off was actually an increased volume as well, so certainly a good signal for capitulation before the rally. Okay, so let's bring up the chart of the S&P 500 as well. Now here we go. Okay, S&P 500. Okay, so here we go. Now looking at the weekly chart of the S&P 500, you can see this key diagonal trend line coming into play. You've got horizontal support as well. So the 1880 level is very, very important. Okay, and that's exactly where we've bounced from, given the fact that futures are now trading at 1900. Bringing up the chart of the NASDAQ as well. Bring up the chart of the NASDAQ. Bring up the daily chart. At the moment, daily chart is in no man's land to a large extent. Only the support level you really have is at the 4080 level. Bringing up the weekly chart, again, you are in no man's land, but you do have multiple areas of support in this region here. So certainly a lot of activity in this region at the 4180 level on the actual Nasdaq itself. And given the talk of QE in Europe and obviously in the BOE in UK, then obviously that will certainly benefit the Nasdaq as well. But it does remain the weakest link at this current juncture, given the fact that GoPro certainly has sent it reeling. Okay, right. And now going back to the European indices, given the fact that I've explained that those two indices are potentially at support, you can see the Euro stocks here putting in a bottoming tail, holding that pivot low at 2975 as QE is talked up. 60-minute chart, you can see we're putting a bottoming tail. Now we are testing this previous support equals resistance at the 3030 level, but I expect us to crack that given the fact that we've had QE talk, and you are looking at a potential gap fill scenario. So gap fill is seen at the 3070 level. The inverted head and shoulders on the Euro stocks is certainly in full swing now, and the inverted head and shoulders target is 3017 to the pivot low at 32970. So you're looking at a 50-point move, so that takes you up to gap fill at 3070. Okay, that will be my target on the upside on the Euro stocks. Okay, in terms of the S&P 350, you can see the S&P 350 Europe is into support on the horizontal axis. Again, with the stock 600, again is another bellwether that I observe in order to ascertain support and resistance, and that certainly is into support as well. Going over to the German DAX now, which dictates, you can see that we approach gap fill. We've got this diagonal trend line, which obviously is a key support region, and we certainly have bounced from there. It certainly is a bottoming tail at this current juncture, and therefore you are looking at a reversal. Again, we have to tackle this concept of previous support equals resistance. Given the fact that we've had QE talk, you are going to break right through that and obviously close a gap above. So don't be surprised at seeing a major rally on the European indices from here. Again, inverted head and shoulders target. Your left shoulder is there. Your head obviously has been put in. We've broken out this downward sloping channel. And obviously off we go to the races to close that gap at 10,000. So don't be surprised to see a monster rally on the German DAX. Again, on the MDAX, again here, it's very important given the fact that it's a larger component. And you can see that you've put a bottoming tail at gap fill, and certainly is a bounce coming. Again, on the tech all share, again, horizontal support, bottoming tail, and you are looking for a potential rally here as well on the tech all share performance index, which obviously has a good link with the Nasdaq itself. Okay, the French CAC now. The French CAC, as you can see on the daily chart, is obviously into support, has held support, put in a bottoming tail, has reversed very handsomely. Looking at your 60-minute chart, you can see that we are now reversing. We are on the verge of breaking previous support equals resistance, and obviously looking to close that gap above. Now, there are two gaps above, so bear that in mind. You've got this one gap here at 4390, and then obviously you have another gap at 4480. And both those gaps will be very, very important in ascertaining market direction. Okay. FTSE 100 now, whilst we're at it, the daily chart, given the fact that BOE was obviously dovish, the daily chart has held up key support level at 5875, currently at 5895 now. Going to your 60-minute chart of the FTSE 100, certainly a bounce, that diagonal trend line certainly is coming into play. Your next resistance level is going to be at 5930. The 10-minute chart certainly is looking very healthy. And like I said, you are looking at the next resistance around the 5930. The H&S target was completed. Obviously, we exceeded the downside sell-off. And the short squeeze was obviously expected. Okay, so I think that's a market wrap. You can see that this market is certainly bullish now. Again, watch out for DAX 10,000. And you are looking at a monster short squeeze. Goodbye now.